Let's take a look at these markets here. We still got a little bit of green on the screen here. Isabel Lee joins us, cross-asset reporter for Bloomberg News. She joins us here in our Bloomberg Interactive Broker Studio. Isabel, what are you looking at?
We're looking at Netflix, and we're going to continue with the green. It's edging higher by almost 5.5%. So the company basically aims to double its revenue and reach a $1 trillion market cap. That's according to Wall Street Journal. And Netflix now has a market cap of around 400 billion. So it's definitely an ambitious goal, but we have BMO Capital saying it's achievable given their best-in-class leadership team. We have Jeffrey saying that Netflix is proving resilient against all the tougher macro. I mean, we know that it's really been a tough environment for markets right now with all the uncertainty with the economy and trade tariffs. But still, it just really highlights that the executives are optimistic about the country's growth
Big
prospects.
numbers, huge numbers we're
Really
talking
big.
about. I'm not sure what the drivers are that get you there. Subscribers, advertising, I'm not sure how that plays out.
Big number.
Good for them. The stock's been phenomenal. What else you got?
Bank of America. So this is also edging higher by around 4%. So we have stock traders posting a record quarter, and that's as the company reaped the benefits of the volatile markets. We heard the same with other big banks like Goldman Sachs. So we have revenue from equity trading rising 17%, and that's how Bank of America beat estimates per earnings per share. And trading of fixed income, currencies, and commodities also came in close to expectations. And the bank sales and trading unit delivered its 12th consecutive quarter of year-over-year revenue growth. So really, it's the kickoff for the earnings season has been a good start, and we have really the banks to thank for it.
It seems like people are really liking these earnings, especially we see financials being the best performing sector right now in the S&P 500. You've also got eyes on Boeing.
Boeing, so this is the opposite story. Shares are edging lower by around 1.5%. So China basically ordered all of its airlines to not take any further deliveries of Boeing jets. And this is part of the tit-for-tat trade that we've been seeing being drawn out the past weeks. Beijing also asked the Chinese carriers stop any purchase of aircraft-related equipment and any parts from U.S. companies. And these tariffs on their own would have more than doubled the cost of U.S.-made aircraft and parts, which is why, to some, it's impractical for Chinese airlines to accept Boeing planes. For Boeing, obviously, this is really not good news because it's a fresh setback. I mean, China is the world's biggest market for aircraft sales, so that's a big market that's shut out for them.